a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about cybersecurity ETFs. So our world is becoming increasingly digital and interconnected, and that is why the frequency as well as severity of security breaches as well as threats continues to rise. And in fact, we saw many high-profile attacks on big banks, other companies, hospitals, as well as government agencies in recent months. And so these attacks continue to highlight the need to strengthen our cyber defenses, and that is why spending on these products and services continues to rise and is expected to go up significantly in the coming years. And last year, amid economic uncertainty and risk of a recession, many companies were cutting their discretionary spending. But cybersecurity is an area that they cannot afford to increase, and governments around the world are also increasing spending in these areas. And cybersecurity spending as a percentage of overall information technology spending increased in 2023 and it is expected to continue to increase. So according to McKinsey research, the damage from cyber attacks will amount to about $10.5 trillion annually by 2025. And that is why the total addressable markets for these products and services is expected to be between $1.5 trillion to $2 trillion in the coming years. Now, last year was all about artificial intelligence, so we should talk about cybersecurity in AI era. So AI will boost efficiency of cybersecurity enforcers. It will help them launch more. It will not only help them detect these threats in a more timely manner, but also launch real-time responses. But at the same time, AI is also being used by hackers, and we will see increasing use of artificial intelligence by these hackers. We have already seen more targeted attacks, many deep fakes, videos, etc. So this is going to be interesting, the use of AI by both enforcers as well as hackers. And that is another reason why spending will rise in the coming years. And the $28 billion acquisition of Splunk by Cisco late last year was to boost its AI-backed cybersecurity monitoring tools. And we could, in fact, see more consolidation in the space, more acquisition of these cybersecurity companies by bigger players. And that is also expected to boost cybersecurity stocks and ETFs. Now, let's take a look at 4 ETFs in this space. So the first one I'm highlighting is the largest in this space with about $6 billion in AUM, charges 60 basis points. Let's learn more about this ETF by going to the quote page on Zacks.com, where you can read our research report articles, and using the link, you can go to First Trust web page for this ETF and learn more about what it does. So to be included in the index, the security, they have certain market cap requirements, certain liquidity requirement, and then they rate on the basis of free float market capitalization and use certain caps. Securities should not exceed a certain rate in the index, and no security should be less than 0.25%. With all those requirements, we see that Broadcom, CrowdStrike, Infosys, Palo Alto Networks. These are the top holdings in this ETF. The second ETF I'm highlighting is by ETF MG. This was actually the first ETF in the space, hack, with the sticker symbol hack. And this launched around a very high profile hack of Sony by North Korean hackers. And that is why it was quickly it gathered $1 billion in assets. But now the leadership has gone to cyber, the first ETF that we discussed. So this currently has 1.6 billion in assets and the same expense ratio. Again, to learn more, let's go to the code page on Zacks.com. I also did a podcast sometime back on cybersecurity with ETF MG. You can listen to that podcast and learn more about this ETF. So what this index does is that it uses a market cap weighted allocation across infrastructure providers and service provider categories. And within those two categories, these securities are equally weighted. And with those requirements, you see similar holdings, but slightly different weights. So CrowdStrike, Fortinet, Zscaler, Palo Alto are among the top holdings in this ETF. The third ETF that I'm highlighting is among the cheapest in the space by iShares, 47 basis points. And in full disclosure, I own it in the ETF investor portfolio that I manage. This follows a market cap weighted methodology and has about 760 million in assets currently. And for this ETF also, you can go to the code page and you can go to iShares web page. These are the holdings currently. So this is, there are not many cybersecurity companies. It's a small space, and that is why consolidation may help these companies. So you, in all these ETFs, you will see similar holdings, but because of different weighting methodologies, slightly different weights. And the last one that I'm highlighting is by GlobalX. The ticker symbol is BUG. This charges 51 basis points and has about 720 million in assets currently. And again, let's take a look at what the ETF does. So GlobalX has a lot of good research on their webpage. If you want to learn more about cybersecurity, you can read their research. And then these are the top holdings in this particular ETF: CrowdStrike, Zscaler, Gen Digital, Palo Alto Networks. On the last slide, I have the competitive performance, and the performance has been pretty similar, between 41 and 45% for all these ETFs, and the GlobalX product was the best performer over the past 12 months, but all these ETFs did pretty well and significantly outperformed the S&P 500 return of around 22% over the same period. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer. Also, make sure to subscribe to our YouTube video channel so that you do not miss anything. And I'll see you next week.